So what is ShawSpring? ShawSpring is a investment partnership. We manage capital on behalf of 16 institutions and a wonderful group of individuals. My singular ambition is to generate Hall of Fame returns. And the way we do that is a very simple strategy. We're looking to acquire stakes in 5 to 10 businesses. We're looking to acquire them on a long-term basis. And really our ethos is to try to keep things simple. I want to try to reduce the variables to those necessary to generate Hall of Fame returns. And the way we do that is a one team, one portfolio, one P&L approach. The strategy is the culmination of 3 pretty distinct periods of my career. So I actually started my career at the Yale University Endowment Fund, and I worked for an individual who just recently passed away, David Swenson, the Chief Investment Officer of the university's endowment fund. And he pioneered something called the Yale model, which is quite simply an investment strategy that an institution pursues in a diversified manner, and they look for kind of world-class investors across different asset classes, including venture capital, hedge funds, private equity, real estate, and so on and so forth. So that was a really, really great place for me to start my career. It was awesome to be able to meet people like Yen Liao and some of your other guests today. And it was just a really great place for me to learn as a young investor. I made the move to the direct investing side. I went to a Tiger Cub hedge fund called Matrix Capital based here in Boston. And then subsequent to that, I helped Brad Gerstner, who was the founder of a firm called Altimeter Capital here in Boston. And I helped scale that up as one of the young people over there. ShawSpring is today a team of 5. We're all based here in Boston. And they're a wonderful group of individuals that I've been incredibly fortunate not only to have as teammates, but as friends and really as thought partners. And it's been a really, really great, fun 7-year ride. A lot of people ask us, what's our competitive edge? It's actually really, really simple. We have something that nobody else has. It's our investor base. They're a carefully curated group of institutions and individuals that simply give us the room to invest as we see fit. We're never going to be the biggest fund, and that's not really the aim of what we're trying to do, but we're trying to be one of the very best. My objective over the very, very long term is to partner with 20 institutions, full stop. Ultimately, the fund's growth is limited by my ability and my bandwidth to have close, active, and productive relationships with our investors. I don't want an IR team. I've never had an interest in having an IR team or a marketing department or really any intermediaries. I want everyone to have a relationship with me. I think that for me, at the end of the day, I'm the one who's accountable for these results. If the results are bad, it's nobody else's fault except for my own. And I believe that our investors should have access to me. And that's just an important tenet for us. So we're going to try to keep it very, very simple on that side of the business. So what are we looking for in terms of our investments? We're looking for quality. So for us, there's a mentor of mine called Peter Kaufman, who is the CEO of a company in LA called Glenair. And he talks about the hallmarks of a great investment: superior return, low risk, and long duration. And for us, we're seeking superior returns at a low risk with long duration. And so for us, the hallmark of a signature ShawSpring investment really comes down to one characteristic that's going to help us achieve superior return with a low risk with a long duration. And that heuristic we call ecosystem control. We're trying to compound capital. And again, a nice, elegant definition of compounding: constant, continuous, dogged improvement over very long-term timeframes. We're fundamental investors. So as fundamental investors, we care about really a couple of financial characteristics: revenue, earnings, earnings power, and free cash flow. And so then, sort of by definition and heuristically, if we're trying to compound capital, we're looking for businesses that are growing their revenue, earnings, free cash flow, and their earnings power at constant, continuous, dogged improvements over very long-term timeframes, which implies that there's a quality element to what we're looking for. We're looking for businesses with robustness. We're looking for businesses that have the abilities to control their destiny. We're looking for businesses regardless of exogenous circumstances, regardless of what's ever happening in the world. There could be trade wars, currency meltdowns, recessions, coronavirus, anything that sort of is exogenous, things that management can't control. We're looking for businesses that, despite these exogenous variables, these businesses thrive. And there's a really, really great quote by Intel co-founder Andy Grove that I've kept through my entire life. And actually, if you follow me on Twitter, it's pinned to my profile, but it's a quote that I always try to remember. Bad companies are destroyed by crisis. Good companies survive them. Great companies are improved by them. So our strategy, we're looking to put our investors' capital in 5 to 10 high quality ideas. We don't need to own companies that just survive. We want companies that are great and become even greater through the face of adverse circumstances. And so all of that comes down to just singular characteristic that we look for in a business called ecosystem control. And it's a very, very simple concept. We write very, very extensively about it through our investor letters. But it's a simple concept where every business exists in an ecosystem of itself, a customer who is the initial catalyst of cash flow into that ecosystem, because that business is providing a good or a service that customer wants. And the cash flow passes through the various different constituencies or stakeholders of the business. They could be the suppliers of the business. They could be the manufacturers or the producers to the business. They could be the employees. They could be the management team. They could be the investors. And what we find, case study after case study after case study, the businesses that are the highest quality exhibit this characteristic of ecosystem control. The stakeholders of the business that I just talked about, they sort of voluntarily lock into the business. And that lock-in is so compelling and so powerful that it is economically irrational for any one of those individual constituencies to unlock themselves from that ecosystem and go to a competitor business ecosystem. And that's a really, really rare characteristic in a business. And so we spend all of our time trying to study and look for and identify this concept of ecosystem control. We spend a lot of upfront time in the early years of our fund developing this framework. Why? Because as a small team, a singular guiding force or guiding principle for our firm is that we need to be doing activities that maximize return on time and effort spent. So developing heuristics or shorthand mental models to identify ideas quickly and efficiently, to weed through this universe of 50,000 public companies, to narrow that down to the best of our abilities to the 5 to 10 that we believe meet the quality characteristics or the ecosystem characteristics that we seek, and that also meet our hurdle rates. Those are the things that we focus on year in, year out.